this is Kristen Hordike, and in this walkthrough I'm going to show you how to read a loan estimate, and more importantly, how to understand what it's actually telling you, especially when you are comparing lenders. A lot of people glance at this document and they focus on the interest rate and they miss the bigger picture. By the end of this video, you'll know where the lender pricing lives, what's estimated, what's third party, and what your loan officer can actually control. I'm using the Consumer Financial Protection Bureau's Loan Estimate Explainer. The CFPB standardizes this form and makes it the same so borrowers can make informed comparisons, meaning that you can compare apples to apples. A loan estimate is one of the most important documents you're going to receive, and you receive it within the 3 business days after applying, along with your initial disclosures. It shows your projected monthly payment, your estimated closing costs, and the long-term cost of your loan. Because of this format being standardized, it's one of the best tools that you can have when comparing lenders, as long as the assumptions are the same. A loan estimate is where you see why. So we're going to start with page 1. There's 3 pages. Page 1, you could see the lender right here. In this example, it's Ficus Bank. The date it was issued. The applicants, so borrower and co-borrower, and the property information, the property address. The sale price, loan term, in this example is 30 years. Purpose, purchase, could be refinance. Product, fixed rate, could be adjustable rate. Loan type, conventional, FHA, VA. Loan ID or loan number, and rate lock, where you could see no or yes. In this case, yes is checked, and we have an expiration date right there. You'll see both the purchase price and the loan amount. These are not the same. The difference is your down payment. And next is the interest rate and the monthly principal and interest payment. This payment does not include taxes or insurance. In this example, we're looking at $761.78. It will tell you whether or not there's a prepayment penalty and whether there's a balloon payment. Most standard residential loans do not include prepayment penalties or balloon payments, but this is where you would see if one existed. Projected payments and escrow. The projected payments section breaks down like this. We have principal interest, mortgage insurance if applicable, and estimated escrow. And we say estimated a lot in the loan estimate because remember, this is just a loan estimate. These estimates are based on current information and can change. When you add these together, you get your total estimated monthly payment, one of the most important numbers on this form. And you may hear this as a PITI payment, which is principal, interest, tax, and insurance. Estimated closing costs in cash to close. This is another very important number. Closing costs are not final numbers. This is an estimate early on in the process. Cash to close is the amount due at closing, and it already includes credits for your earnest money deposit. It is not on top of what you've already paid. Let's go to page 2, and if you look over here to the right, I'm going to include this link in the description. You can click here and it's going to give you more of a description, and it's also going to highlight it here on the left. Same thing for page 2. You can click on the right here and it'll open up more detailed descriptions. Closing cost details. This is the majority of the loan estimate. The first page, it shows you the big picture. The second page breaks it down for you. Page 2 is where the most confusion happens, so this is really important. Section A, loan costs, what the loan officer can control. Section A includes origination charges, points if there's any, underwriting or application fees. It is really what the lender is charging. This is where the lender pricing lives. This is the area your loan officer has the most influence over. The rate you choose, whether you pay points or you receive lender credits, which would be found down here in Section J, And how the lender structures their fees will show up right here. If you're comparing lenders, this section matters the most. Then we move on to Section B, services you cannot shop for. Section B includes things like appraisal, credit report, required third-party services, loan processing. These are third-party fees required for the loan. Your loan officer does not set these prices, but accuracy here reflects experience. Services you can shop for. Section C includes title and settlement services. These fees come primarily from the title company. While your loan officer doesn't control title pricing, a thorough loan officer like myself works closely with title and escrow to provide realistic estimates and not just placeholders. And what I mean by that is I contact title in the very beginning and we get a fee worksheet that we go ahead and enter in on the loan estimate, making it more reliable. Prepaids and escrow setup. So this is what we're looking at right here. These aren't lender fees. They're setting up your escrow account so taxes and insurance can be paid on time. Owner's title insurance appears here as well. This is completely optional, so it is very common to see this section blank. Section E, taxes and other government fees, recording fees and other taxes. And sometimes you will see state-specific fees like the Washington foreclosure prevention fee. Prepaids, homeowners insurance, 6 months, sometimes you can see 12. This is highly dependent on you and who you choose for your homeowners insurance, and we ask you to get a quote. Mortgage insurance premium, if there's any. Prepaid interest, we take the amount per day for how many days at the interest rate, and this is how we come up with the number. G is the initial escrow payment at closing. Homeowners insurance, we take a cushion of 2 months, and property taxes as well, and this helps us make sure that your escrow account has enough money in it in the very beginning so we can make sure that you're not behind in these payments. Coming down to J, total closing costs, you're going to see lender credits here. You're not going to get points and lender credits at the same time. And I have a video explaining the difference between the two and why you might see points or why you might see lender credits. Calculating cash to close. This is one of the biggest, most important pieces of information on this page. It takes your total closing costs. It takes any closing costs that are financed, paid from your loan amount. A common one you will see right here is upfront mortgage insurance premium or the VA funding fee. Down payment funds from the borrower. Deposit, you can see here that your earnest money deposit that you gave to escrow in the very beginning of your contract is displayed right here, and it's used as a credit. Funds for borrower, any seller credits that you may have from your contract. Your realtor may have negotiated credits to help go towards closing costs or whatever other reasons. And this is what derives your estimated cash to close. And your estimated cash to close is what is going to be wired at the very end, and this is what you bring to the table to close. Moving on to page 3. Page 3 is about long-term cost comparison. You'll see the APR, total interest percentage, and the 5-year cost breakdown. APR is not the same as interest rate, although it's confused often. It reflects the total cost of the loan expressed as a rate, and it's useful for comparison. But it shouldn't be the only factor you consider. Other important details, you'll see down here, appraisal. Most of the time we're going to order an appraisal, so this is very standard. Whether or not your loan is assumable. In this case, this one is not. Servicing information, what happens if you have a late payment. And servicing, whether or not the lender intends to keep the loan and service it, where you make the payments to that lender, or to transfer servicing of your loan. If you close in December, your first payment is typically due February 1st, not January 1st. Intent to proceed, your signature down here along with the date, and signature on the initial disclosures that go out with this loan estimate. And it must be signed to indicate intent to proceed. No appraisal can be ordered and no underwriting can begin until all of this is signed. Final thoughts. The loan estimate shows you what the loan actually costs, which fees are lender driven versus third party, and what questions you should be asking. If you want detailed, deeper explanations of rate locks, points versus credit, or mortgage insurance, you can find them in my YouTube channel. If you find that you have any questions, if you're looking at your loan estimate and you're learning how to read your loan estimate, you're comparing it to a loan estimate that a lender that I'm working with has issued you, please don't hesitate to reach out to me, ask questions. It's really important that you understand what you're paying, what your monthly payment's going to be. And again, I can't stress this enough. This is just an estimate. But this is really what you should expect to see on the closing disclosure, which is the finalized version, I would say, of this form. But please don't hesitate to ask, because it's very important that you know this is one of the biggest purchases of your life, and it's important to ask questions. Thank you, and I will talk to you later.